is going to be a more interactive panel. For one thing, we've had more time to prepare and meet each other, and I'm very excited to be doing this panel. The discussion on emerging markets comes at a very interesting time. Many economists are writing off emerging markets for cyclical and secular reasons. They are responding to the fact that many people say, why shouldn't I just stay in the United States and invest in Apple and NVIDIA? And the US and NASDAQ in particular seem to be sucking up all the oxygen from the rest of the world for reasons that have to do with economics, but a lot politics. And if you notice, if you look at statistics on trade to GDP, the proportion of trade to GDP has been going down since before COVID. There's no sign it will recover. In fact, it's going down at an accelerated pace, which shows how much protectionism is in the world in the guide under the rubric of resilience, but it's all about protectionism to me. Things like the Inflation Reduction Act, which people in the US think is brilliant, is distorting the cost structure for renewables all over the emerging markets and giving them incentive to go back to coal. And that's just one of the sort of sad things about the world today. We are focusing on emerging markets. We will have a bit on China, but we are going to have a lot of counterintuitive directions in this panel today. And that's why I'm going to start with you, Durrani, and you are going to bring us up to speed about Afghanistan and just show us how many of our conceptions are actually misconceived.
Okay, that's a left curveball, but okay. So just to start off, I'll introduce myself. Sardar Ahmed Durrani. I'm a partner at Osiris Group. We do frontier markets, Bangladesh, Pakistan, Sri Lanka, Myanmar, Nepal, and now Middle East as well. Afghanistan is not really our mandate, but yes, because it's right next to one of our bigger markets, Pakistan, we've been seeing a dynamical shift over there.
And I wanted to talk about why Afghanistan, because commodities.
Yes.
So explain and elaborate.
So the discussion point, I understand where you're going with this. So the discussion point was that why is Afghanistan a safer bet right now compared to some of the markets that we actually are thriving in, is because the current government sits on a large base of lithium. Most of you understand that. And the Chinese market wants it, the Russians want it, the British and the Americans want it. So there's a very egalitarian scenario going on in Kabul right now where everyone's being very polite with the Taliban saying, hey, what can we do more to help you out right now? So the infrastructure is going in, NGOs are going in, capital's flowing in that market, their currency is doing really well, they get to travel everywhere. In fact, I was telling Henny that they've given a little bit of a travel disclaimer to their own citizens to be careful traveling to the neighboring countries, basically highlighting Iran and Pakistan, because they feel that they are sitting on a large base of a very wanted commodity and they're going to milk it. So yeah, that's just a little bit of a nuance of why frontier markets all of a sudden thrive, because there's something there that the rest of the world wants, simply.
Now I'm going to ask you to elaborate a little bit on some of the markets that you do actually cover that have investable opportunities.
So
including Bangladesh, which many of you will be surprised to hear, the per capita income in Bangladesh is larger than that in India.
So per capita GDP is higher than India recently. They've just surpassed it, yeah. The reason why we started with Bangladesh was you have to take a step back and understand frontier markets are defined because of the lack of infrastructure, because of the lack of growth in their markets, capital market establishment as well. We focus on the youth. We focus on the urbanization. We focus on where is their mean population as well. So, for example, Bangladesh is at 25, so the average age is 25 years old. Pakistan is 23 years old. Highly urbanized. Bangladesh has two major cities, Chittagong and Dhaka. You can call Khulna and Cox's Bazar as bigger cities as well, but essentially there's two major cities. Pakistan has three major cities, Karachi, Lahore, Islamabad. others Peshawar, Faisalabad are industrial bases as well, but it's a very concentrated population, highly urbanized, highly digitized. People say their literacy rate is low, but their digital literacy rate is high. My driver doesn't know how to read or write, but he knows how to send money on a mobile device very quickly. He knows how to order food on a mobile device very quickly. So the digital economy is ramping up very quickly. So in that space, consumerism is high, consumption is high. And that's the spaces we want to invest in. You want to invest in diapers for babies. You want to invest in education platforms. You want to invest in health tech. You want to invest in logistics tech. So most of our companies that we help develop and then invest in later stages as well are those that sell picks and shovels in a growth phase rather than going after that gold mine itself. That way you build the ecosystem from the back end. For example, one of our companies I'll just mention quickly is Aware, which is Airbnb for warehousing. Everyone else is running after the main shopkeeper or the shop front that we want to sell POS devices or we want to digitize your inventory or your supply chain. But Aware steps back and says, all of these companies require warehousing, but they don't have the capital to pay for a 3-year forward contract. So they come in and they give them out monthly, quarterly, weekly contracts. So they're the Airbnb for warehousing. So they're solving a larger problem in a micro way.
Before I leave you, I'm going to ask you to talk on a micro level about one other thing. In the world today, food security and energy security have never been more important. So you invest in ag tech, in food tech. Can you give us an example of one of those investments?
So in Bangladesh, we have a company called, forget the name right now, Cultivate. Sorry, just slip for a second. Cultivate started off like most of these markets. In Pakistan as well, we tried this as well. And in India, a lot of our counterparts have tried this as well. They all tried to disrupt the middleman, which is historically in this region called the Aarti. Everyone says the Aarti is a bad man. He's the one who takes the large margin. He's the one who takes the farmers to the cleaners as well. So the banks tried to disrupt him. The politicians tried to disrupt him. The NGOs tried to disrupt him. And the tech side tried to disrupt him. All of them failed because they all tried to do away with him. We went in and we said, let's not disrupt him. Let's empower him. Because he's the guy who the farmer knows for generations. So when the farmer's daughter is getting married, he goes to the Aarti for capital. When the farmer's crop burns to the ground, he goes to the Aarti for the capital. When the politicians are doing re-election campaigns, the Aarti pays for them. So you go and empower this guy, you digitize him. Where he used to handle 4 or 8 farms, now he handles 25 farms through his digital tools. So by empowering him, you do 2 things. You help the government because all of a sudden, all the money that flows through the Aarti through his digital means is now transparent, so you can tax him better. And secondly, the Aarti is now more than willing to pay those taxes because his overall top line has gone up so much that he doesn't mind paying that smaller amount of taxes. Otherwise, before he was only handling 4 or 5 farms, now he's handling 25 farms. So that's the point.
Thank you. I'm going to turn to Joseph now. You heard a lot yesterday about China, and I thought that we should have somebody making the more optimistic case about China at the time when valuations are so close to their record lows. And if you look at the risk return, you have to say there's more upside than downside from here. So Joseph, I want you to make the optimistic case for China. And then I'm going to ask you to talk about whether you're piggybacking on Chinese as they go more and more into Southeast Asia and the opportunities there.
Thank you, Henny. Quickly, I run a PIPE fund focusing on Greater China and Pan-Asia. PIPE means private investment in public equities, because as Henny correctly pointed out, the valuation of many public companies in the Greater China market, in the Southeast Asian market, they're even cheaper than the valuation at their PE run, or even some of them are traded below their VC runs valuation. So for a value investor like me, I think this is a great opportunity to be on the buy side to take advantage of the negative sentiment of macro investors, international investors who are politically negative about China. So that's why you can do bottom fishing to buy on depth and to make great return. My fund's return has been double-digit year to date. Thank you very much to the negative sentiment on China. Also because I have a view about China's forthcoming macro policies, I think it's going to be on the easing side than the tightening side. I was trained, fortunately, in China's central bank more than 20 years ago. So I have some humble insights about China's monetary policy. I think it's going to be on the other cycle with the US monetary policy. China started easing the monetary policy since about 2 years ago, but it needs to be more aggressive because the sentiment, consumer confidence, international perspective of investors tend to be on the negative side. So I think Chinese government need to bite the bullet and launch more aggressive monetary policies, such as a run of QE in China starting from next year to address the concern. If it beats the expectation of investors, I do foresee a big bottoming of opportunities with both the Chinese equity market and the economy. And that's why we are able to accumulate positions on, for example, PE of 3 to 4 times, price to book of 0.5, 0.6 times. But in the meantime, I also want to echo Henny's point about Southeast Asia, because Southeast Asia naturally benefit from.
But before we go to Southeast Asia, let me follow up on China. So I don't know how many of you realize this, but the renminbi is actually becoming a funding currency. And when I look at private markets in China, you can see that you can get such lucrative terms and such generous terms that you can take all your equity off the table in just months and lock in returns just on the basis of the financing. So before I ask you how that affects the kinds of deals that you're doing, let me ask you this other question. You know, the rates in China are low, going down lower.
Interest rate, yeah.
So there's ample supply, but is there ample demand for credit? Because so far, most of the stimulative effects have operated on the supply side, but there's the main problem in China today is inadequate demand on high household saving rather than consumption. So could you address that before we talk about Southeast Asia?
It's a very good point. China already announced recently to issue a 1 trillion RMB government bond, special government bond, to be focused on infrastructure projects. But we think it's not enough, and it's not relevant enough. We think the most critical policy that Chinese government should launch is to give out spending coupon. I'm thinking about a Chinese name. It's translated into English. Spending coupon, as what the U.S. government did during COVID. I personally foresee China should and may launch this initiative and to stimulate the consumption. If it happens, that will address the concern that Henny, you brought up, the demand side, particularly on the consumption side. I think it's very, very effective. But we need to wait and see whether this is going to happen and when it will happen. I tend to be on the positive side about this.
Before we go to Southeast Asia, can you give one example of a recent transaction that you've done so the audience can understand your business model at Arcadia?
Sure. We identify highly undervalued public companies in the market, and we negotiate investments with these companies with favorable terms. One effective tool that we utilize a lot is convertible bonds. Imagine if you can invest into a company with, as I mentioned, 4 to 5 times price to earnings and 0.5 to 0.6 times price to book. It's already attractive enough. But we want to be focused on downside protection too. So convertible bond is a very effective way to achieve this goal by investing a CB into a highly undervalued, high quality listed company. You can achieve the equity upside and the bond downside. So I think that's a very effective way to achieve it. I made my fund made 3 investments already. One in the best quality medical device maker, listed in Hong Kong. The other is the largest vitamin company / nutrition company, listed also in Hong Kong. The third one is a basket of a consumer portfolio of Greater China positions.
So none of these areas are sensitive
No.
from a technology
It's a
point
very
of
good point.
view.
Yeah, we want to invest into defensive sector business with the least policy risk. Yeah, so consumptions, energies, and medicals, and technology. Yeah, some technologies are my focus.
Onto Southeast Asia. And to what extent are you piggybacking on Chinese as they go into Southeast Asia?
Yeah, I'm positive about Southeast Asian countries, particularly those with large population like Indonesia and Vietnam. I visited Vietnam during COVID last year, July last year. I was very inspired because Vietnam is similar to China 20 years ago, and it's younger. The population of people younger than 30 years old account for about 60% of the population. Indonesia is about 50%. So they are the future laborers, they are the future consumers. And also their GDP growth has been impressive, both over 5% year to date. And they benefit from the shifting of the supply chain from China to other countries. And Indonesia and Vietnam are naturally the beneficiaries because of their large size in terms of size and also in terms of population. Indonesia has 270 million population, and Vietnam has almost 100 million population. As I mentioned, they're young and they are hardworking. So I'm focused on sectors such as e-commerce in those countries, as well as consumers. I like consumers. I think it's going to be a main theme for emerging markets over the next 20 years, and even certain energy companies. Even we're constrained by ESG, but I'm still a fan of natural gas, for example. It's the clean energy of traditional fossil energy. I think it benefits from countries shifting from consuming coals to natural gas for electricity generation. So I think it's also going to be a sector that can deliver good return for us. So I think what China is going to do is similar to what Japan did 30 years ago, expanding to neighboring countries in terms of manufacturing and technology shifting. So we should look at China from looking at its GDP growth to the GNP growth as what we are doing on Japan.
Great point. Pavel, I'm going to turn to you now, but instead of me asking you questions, I'm going to have Durrani follow up after you describe what you're doing.
Yes, Henny, thank you so much. And listen, unlike many other panelists here, I'm a business builder. We're actually building a business. We're building the best credit-led neobank for Southeast Asia, as Joseph's saying exactly. I mean, this is a fantastic region, right? 500 million people that are essentially underbanked. Incredibly young generation, right? I mean, just coming of age. So the median age in the Philippines, I think it's 24 years. So this is one of the youngest populations in the world. And these people have been long neglected by traditional and legacy banks in terms of their ability to get access to credit, in terms of their ability to transact and take control of their financial lives. So that's what we do with lots of technology, right? I mean, what people underestimate, this is, I think, one of the biggest misconceptions, right? People underestimate the richness of data that's today available from this, right? And the digital footprint that people are living in all of these emerging markets is perfectly capable of letting us score them and score them highly efficiently for purposes of providing convenient consumer credits, providing credit for their SMEs, businesses, providing other instruments, InsurTech, debit cards, what have you, right, to really take control of their financial lives. I think the second misconception that we have is they don't appreciate the role of AI, that artificial intelligence, that will be brought, and we're bringing that as a market leader just in terms of building lots of in-house AI solutions to analyze this data that people now possess and have in their mobile phones. Just as a statistic, I think an average Filipina spends 9.5 to 10 hours per day on a mobile phone. Right, and this gives you an incredible richness of information to really say, okay, would you like to receive a certain credit of this sort, right? Would you like to have this financial product, that financial product? So we're incredibly optimistic about the region, right? We do believe that it's not a buy today, sell tomorrow story. This is an idiosyncratic long-term growth story for these hundreds of millions of underbanked. Again, I think an important stat, Henny, we discussed this earlier in the meeting, is the degree of neglect of the average Southeast Asian consumer by the traditional banks. So we'll look at things like mobile application rating for the biggest bank. So the biggest bank in the Philippines has actually a mobile app rating of 1.4, right? That's an incredible number. I mean, what do you need to be doing on a consistent basis in your life so hundreds of thousands of people rank you every week at 1? that's obviously, and we're changing this. So we have our mobile app that's rated at 4.8. We have an incredible following. I mean, people love what we do. We're building a licensed bank in the Philippines. We're expanding to other markets, and we believe that the future is bright, right? The future is Salmon here. So we're going against the flow of the legacy industry and building our version of new bank for Southeast Asia, where the opportunity, I think, is as unique and plentiful as anywhere else.
Thank you.
Thank you, Pavel. So the same question we had upstairs, so I'm just going to elaborate a bit more for the audience as well. I'm clearly interested. It's a great platform. You guys are incentivizing that whole space as well. Here's the question. Your TAM right now is predicated on the idea that people already have mobiles. What's the strategy for the organization to kind of expand further to the unbanked with regards to those who are not yet digitized? Is there some sort of incentive plan with the government that you're working on, or is there a partner in the hardware side that you're working with to get cheaper devices? What's the plan to increase that TAM?
We do believe that the penetration of smart mobile devices will be marching well ahead of the penetration of banking services. And that's been the trend in China. That's been a trend in many of the Southeast Asian countries. And I think as you look at more of frontier economies, I think you'll be surprised at what speed the value and price of this device will be coming down over the next few years. So we don't think that's a binding constraint. The real binding constraint is the credit market infrastructure, is the government system of, say, IDs, it's the credit bureaus, it's other things that we need to bring together to make sure that the network effects fully kick in. That's happening in front of our eyes today in the Philippines, right? Where the government introduced, for example, so in the Philippines, as an example, they used to have 26 different forms of government IDs. So, I mean, lots of fake IDs, lots of fake identities, what have you, right? Now, 2 years ago, they rolled out this PhilSys, a super modern, super digital ID. You just scan the bar, and you can actually just go to government repository, just look at the biometrically measured face, compared with our face recognition of the person in front of you. So fraud is taken to a minimum. So things like that are important, and they're far more of a binding constraint than the penetration of mobile phones.
That brings me to a very good point on, I'm going to pivot a little bit on that exactly. So when you take data from the government sources and when you take data from the private sources as well, is it bound, restricted only for Philippines jurisdiction only? Or can you work with the Googles, Facebooks of the world to get global data as well? In terms of
we obtain all legally available data, and that's global in terms of footprint. Providers are global, and there are many providers in the market that, for example, process the mobile operators' data and provide it to you in the form of a anonymized scoring. So privacy is preserved, but at the same time, with the credit provider, we actually get clarity on this.
I'm going to cut you off and ask one final question because I need to shift to Brendon, and we only have 5 more minutes, unfortunately. And that is, do you find that your credit scoring processes are very different than those of a traditional bank, and you rely on very different metrics? Short answer, please.
Yes, the answer is absolutely. We are AI-driven. We're data-centric. and we're incredibly fast. So it takes, on average, 27 seconds for us to score a person that walks into any store of our presence or logs online, and 27 seconds is very different to 2 months for the average bank in the Philippines.
Thank you so much. I'm going to shift to Brendon now. I have lived in Hong Kong for most of my adult life. And when I first came to Hong Kong, I thought it was still a very colonial city, and it only looked west. The fact that Brendon is here says that Hong Kong is beginning to look, well, actually, depending on how you see the world, because Hong Kong is on the other side from Britain and the US, the fact that you're here is saying Hong Kong is now looking toward the Middle East and forming closer relations in that direction. And it comes at a time when Hong Kong is widely perceived as China, and as such, it is subject to increasing challenges. And many of the best China investors and Hong Kong investors can no longer, for example, raise money from US pension funds and endowments the way they used to. And I'm so pleased to see the bridges being built between Hong Kong and other countries, especially here, where we have a very complementary relationship, I believe. So Brendon, maybe you can spend a few minutes talking about why you're here.
Yep. Thank you, Henny, for the introduction and your passion with Hong Kong and having me here in the panel. First of all, I want to say that Hong Kong has always been welcoming and friendly to anybody from all over the world. Of course, we are part of China, but we have a very different legal system. We are the only city that is running a common law system of the biggest economy, in the second largest economy in the world, that's China. So Hong Kong is very unique. Of course, in the past we have a close connection with the Western world. Now we seems like to be closer to China, but yeah, for the obvious reason. But the DNA of Hong Kong hasn't really changed. We are always an international city, and this is one of the reasons why I'm in the Middle East for my duty visit, representing Hong Kong to promote the policy we just announced early this year, which is to attract global family offices to set a presence in Hong Kong. Obviously, a lot of wealth has been built in the mainland China in the past couple of 10 years or so. They are very important to the ecosystem of family office in Hong Kong. And to be frank, they represent around half of our ecosystem. But then we don't want to neglect the other countries that many of them have generated wealth as well in recent years. Dubai is one of it, and the Middle East, there are other countries very dedicated to grow, and wealth has been generated. So we are getting in touch with countries in the Middle East. Dubai is, of course, the main center, and we will be in touch with Saudi Arabia, etc. But we're not just, as I mentioned, we're not just focusing in one region. Our team has been set up 2 years ago, and we're going to outreach to everywhere else in the globe. Later on, we'll be reaching out to even Latin America, Africa,
Thank you.
Western countries as well.
We have one more minute, and Durrani, I want you to finish by saying why you moved to this region.
Yeah, so
and then
I'm going
our
to add
time
to
is
Brendon
up.
as well, because
There's one point I want to add, very important. I just spoke to a US family office principal just here at the hotel. And we had a very good conversation, and he's very much interested to Hong Kong without any bias. And that's the kind of people we like to connect.
Brendon, I'm shutting you off.
Please.
Durrani.
Just to add quickly to Brandon's point, I completely agree with you. That is a market that everyone should look at. One of the things that most people don't realize is Hong Kong Stock Exchange and Tadawul in Saudi Arabia, and also NASDAQ here, and ADX as well, actually, have a dual listings MOU already signed. So companies in Saudi Arabia, companies in UAE that are getting listed here can actually get a dual listing going on in Hong Kong as well. And we, as Osiris, do one of those things as well. So it's a capital flow thing. Markets that couldn't access before now can access Hong Kong Stock Exchange as well.
And on that note, we'll finish, and hopefully we will have this conference next year in Hong Kong as well as in the Middle East. Thank you so much.
Thank you, Henny.
Thank you.
Thank you, all of our panelists. We actually have a few minutes for questions if we've budgeted a little bit of time before we break for lunch. So do I have any questions from the audience, and I can get a microphone from you, because there was a wealth of knowledge being dissected in this panel.
Or is there any questions from the panel to each other?
Sure. I have a few minutes. None? Okay. Any last takeaways, and then we will wrap this up. Maybe 30 seconds each.
Well, let's ask Raha. Can we all meet again in Hong Kong?
Let's spread the rumor right here.
Here's a question.
Same summit.
Don't mean to put you on the spot.
Okay.
Yeah, a quick question to Brendon. So Hong Kong has been leading the way of rethinking digital assets regulation pretty much on the global scale. Can you comment on that? Where do you guys stand on that?
Hong Kong has been, for developed financial market in Hong Kong, we are rarely would be very aggressive on new technology. But in terms of the Web3 and crypto business, Hong Kong has been surprisingly very supportive, and we are giving out licenses for virtual asset exchanges to set up in Hong Kong. And this is one opportunity that exists in Hong Kong. And of course, this business hasn't been very regulated, and there has been many dramas happen. Even locally in Hong Kong, JPX, if you're aware, has another case that affected many people, many investors. And the sense of Hong Kong is to create a exchange or platform that at the same time allows businesses to expand their operations and make money. At the same time, we are protecting small investors and professional investors, family offices, etc. So we're creating this infrastructure, and I think Hong Kong is going to continue to do that. And we are not switching our policy all the time. We're very consistent on something that has been written, and we will follow that. We are not going to be very...
Joseph, do you have anything you want to add as somebody who knows Hong Kong, China so well?
Well, I have lived in Hong Kong since 2005 after I returned from New York, working for JP Morgan. I think particularly American investors are very, very cautious about China and Hong Kong. Based on my experience over the past 20 years, I think sentiments could shift very quickly, and it could peak, it could bottom. So the most important thing for us on the buy side, I think, is to identify the highest quality companies with the cheap valuation, and to deploy capital and to take advantage of the sentiment. That's my take.
You know, one of the crown jewels of Hong Kong is a company called China Light and Power. And they operate in Australia, China, Hong Kong, and India. And a few years ago, the government of India said to China Light and Power, which is public but family-owned by the Kadoorie family, they said, you are a Chinese company now, and therefore you have to divest control of the Indian operations, which were sold to one of the Canadian pension funds. So all of us may believe in globalization, but this is today's reality and why Hong Kong needs to look in all directions. Thank you very much.
Thank you. Fast, a round of applause for our panelists. Thank you.